Hello friends, let us see today a concept which has become popular in last decade or so, and that is reverse mortgage. We know the term mortgage. This is nothing but giving the property to the lender, the financial institution or the bank, creating a charge on the property and getting the loan from that financial institution. So the legal formalities that we do is called as mortgage formality. While buying a house, what we do normally is we enter into an agreement with the builder, or we own a plot and start construction on the plot, and then we approach the financial institution for the loan for construction. The financial institution will ask you, the borrower, to mortgage the property, that is to mortgage the flat to be purchased or to mortgage the plot on which the building or the bungalow is to be constructed. This mortgage is registered with the sub-registrar of the company, and that creates a charge on the property. Then the financial institution will start giving you the loan amount. The loan amount is disbursed in installments. As per the agreement with the builder, the payment is required to be made by the purchaser of the flat to the builder. And for making this payment, the purchaser of the flat, that is the borrower, will approach the bank or the financial institution and will get the amount released in installments. In short, what happens is, the borrower is not the owner of the flat at the time of borrowing. He might have entered into an agreement to purchase, but is not the owner on that day. The property is not in existence. The property is under construction. The amount is disbursed in installments, but the property is mortgaged. And once the whole amount is when the whole amount is disbursed, then repayment will start. We call it as EMI, equated monthly installments. This is called as a regular mortgage. But there is another mortgage in the eyes of law, and that is called as reverse mortgage. Exactly opposite of regular mortgage. Here what happens then is, the person mortgaging the property is the owner of the property, is in possession of the property is in existence, the mortgager is using that property, and that property is mortgaged. As against regular mortgage, this property is in existence, is completely ready, is constructed. So, once this mortgage is done, the borrower is entitled to get the amount disbursed in three ways. Way number one, he may get the amount disbursed in lump sum. He can mortgage the existing property after completing the mortgage formalities. Whatever amount is sanctioned, of course that sanctioned amount will depend upon the market value of the property. Some percentage of market value is the sanctioned amount of the loan. So he can get the amount disbursed in lump sum in one installment only. This is number one. Number two, he may ask the lender to disburse the amount in installments. For example, every month he will withdraw so much of amount. Of course, subject to maximum amount sanctioned. And the third way of disbursement is, the maximum amount is decided, is sanctioned, and as and when required, the borrower may get the amount disbursed. So it is neither in lump sum nor in pre-decided installments, but as is the requirement, the amount is withdrawn by the borrower. This type of loan also has some interest. Now the question is how this loan is to be repaid. Of course, the borrower can repay the loan if he wishes to repay, if he is able to repay. If he is not able to repay, if he doesn't wish to repay, well, he need not repay the amount. There are no installments of repayment fixed. He can simply go on withdrawing till the time the maximum sanctioned amount is reached. Then who can get this type of a loan? Who is the beneficiary in the real sense of the term? Well, the senior citizens, probably having no income source, may well get the advantage of this reverse mortgage. They need not sell their house, their flat or bungalow, whatever it may be. They can own the house, they can use the house remains their own house, they remain the owner of the house, but still they can mortgage that property and get the amount disbursed. So it fulfills their two purposes. Purpose number one, they do not lose their ownership of the property. They do not lose the possession of the property on one hand. And on second hand, for their day-to-day maintenance, well, they can withdraw the amount from the loan. In other words, it's a big relief to the senior citizens having nobody to take their care. Without selling their property, they can even earn, they can even get a regular amount from the financial institution. So those parents whose sons and daughters are not living with them, they may be in the foreign countries, or there may not be good understanding between them. In such cases, the parents can spend their life happily without any financial worries. Then how this loan is repaid? Well, if the borrower decides to repay, and if he has sufficient funds to repay, well, he can repay the loan and get the charge vacated. Or otherwise, if he is not able to repay, the charge remains on the property, and after the death of that borrower, well, the members in the family may decide to repay that loan. If they repay the loan, then the charge is vacated and the free title of that property is again vested in the family members. If they do not repay, then what the financial institution can do? The financial institution can sell that property. From the amount that they recover from this sale, they can get their loan repaid with interest, and if there is any balance left, well, that balance can be paid back to the family members of the borrower. This is, in short, the concept of reverse mortgage. And as I said, it is giving a very great relief to the senior citizens because it protects the ownership and possession of the mortgager, the borrower, and also it can ensure the amount for their maintenance. Well, let us meet in the next week or next episode with some new concept. Till then, goodbye. Thank you.